Today, Wall Street investors will have all clues to revise their portfolios. The economic calendar will provide investors with a batch of macroeconomic data and a food for thought. The benchmark stock indexes closed mixed yesterday. The Dow Jones slipped by 0.48%, having incurred the heaviest losses. The Nasdaq added 0.11%, being the only gainer. The S&P 500 dropped by 0.16% to close at 4,507 points. The major stock indexes traded higher at a brisk pace in the New York pre-market. Futures on the stock indexes climbed by 0.5 and 0.7%. The S&P 500 is expected to trade in the intraday corridor between 4,500 and 4,590 points. Now let's sum up the dynamic of the stock indexes this summer. The inflation data released on Thursday matched the estimates. It means that the US Fed could halt its aggressive monetary tightening. The Nasdaq reached the highest level in more than 4 weeks after the US Commerce Department reported that the PCE price index grew by 3.3% in July on year, in line with the expectations. Excluding volatile food and energy prices, the core PCE climbed by 4.25 in July from a year ago, also matching the consensus. Yields over 10-year treasuries declined to 4.09%, thus propelling a rally of high-tech stocks. The oil in the ointment was a weekly update on unemployment claims as they decreased to 228,000 last week, higher than 235,000 in the forecast. Speaking of the corporate sector, the most sold stock in the S&P 500 index was Tesla. During the session, shares worth $27.7 billion were sold. The shares of the electric vehicle manufacturer increased by 0.46%. Salesforce shares rose by 3% after optimistic revenue forecast from the cloud software provider. Out of the 11 sectors in the S&P 500, 7 declined on Thursday, led by the healthcare and utilities indexes. Importantly, all 3 major indexes incurred losses in August, with both the S&P 500 and Nasdaq logging their first monthly decline since February. During the month, the S&P index fell by 1.8%, Dow Jones dropped by 2.4%, and the Nasdaq declined by 2.2%. Although the last month of the summer was not the most successful, Wall Street indexes aimed to open the autumn on a positive note. Futures on the US stock indexes rose on Friday, boosted by long-awaited labor market data. The highly anticipated report by the Labor Department showed that the US economy added 187,000 jobs in August, following an increase of 157,000 in July. The region surpassed the expected 170,000 jobs. The most robust employment growth was recorded in the healthcare, leisure, hospitality, social care, and construction sectors. On the negative side, the transport and warehouse sectors reported 34,000 layoffs. Nevertheless, the number of new jobs has missed the psychological round level of 200,000 for a third month in a row. It indicates that hiring conditions soften in the United States labor market on the back of higher borrowing costs. Besides, the unemployment rate went up in August. The jobless rate in the US rose to 3.8% from a 3.5% in July. The fresh reading is the highest since February 2022, beating the consensus of a flat reading at 3.5%. The number of the unemployed increased by 514,000 to 6,355,000, and the participation rate grew by 222,000 261,484,000. The market also turned attention to wage growth. The average hourly earnings in the private non-farm sector rose by 8 cents, 0.2% to $33.82 after a 0.4% increase in the previous months. The data turned out to be below market estimates of a 0.3% growth. This was the smallest growth in the average hourly earnings since February 2022. As you understand, the combination of signals indicates that the U.S. labor market is finally starting to cool down, suggesting the completion of the tightening cycle. Investors still need to assess the final S&P manufacturing PMI and the ISM manufacturing PMI. Both readings are related to August. In the corporate segment, Broadcom shares fell by 4.2% in a pre-market trading as the chip manufacturer forecasted lower than expected revenue for the current quarter due to a decrease in corporate demand. Dell Technologies shares jumped by 10.1% after PC manufacturer raised its annual revenue and profit forecast, benefiting from the artificial intelligence boom. In the currency market, after the release of the NONFARM payrolls, the US dollar index had to take a back seat, giving way to its counterparts in the basket. As a result, by the time of preparing this material, the US dollar index was trading at 103.30, or 0.25% lower. The index is likely to trade in the intraday corridor between 102.70 and 103.70. On a Friday, the dollar was on a track for its first weekly loss against other major currencies since mid-July. The decline in the U.S. Treasury yields this week led the dollar to drop to a weekly low against the yen. In other countries, the yuan rose to its highest level since August 11, after the People's Bank of China lowered currency reserve requirements for the first time in a year. Later, the yuan partly reversed this increase. The US dollar index showed its highest monthly performance in August in 3 months. The index gained 1.7% in August. However, a series of employment and inflation data significantly dampened the prospects for the American currency. Traders are assessing the likelihood of a rate hike on September 20 at only 12%. If the PMI data does not bring any surprises, this figure could slide towards zero. As for the Canadian dollar, it extended its weakness today. Closer to the opening bell, the USD CAD pair was trading at 1.3559, or 0.37% higher. The intraday corridor for the instrument is determined between 1.3510 and 1.3620. Despite the easing of dollar pressure and the rally in oil prices by 1.4 and 1.7%, today, the Canadian dollar could not gain ground. The reason lies in the domestic GDP data. In the second quarter of 2023, Canada's GDP stalled, failing to meet the market's expectations of a 0.3% growth and not being able to sustain the 0.6% growth as in the previous quarter. This result underscores that the Bank of Canada's interest rate hikes are impacting the Canadian economy, which has slowed down from the strong growth rates seen earlier this year. Investments in inventories, housing construction have declined, cementing the impact of a higher borrowing costs. Additionally, imports of goods and services increased by 0.5%, more than offsetting the 0.1% rise in exports. On an annual basis, Canada's GDP contracted by 0.2%, which is significantly below market expectations of a 1.2% growth. This week, the crypto market is trading remotely without a clear-cut trajectory. Crypto assets are spoked by Gary Gensler, the chairman of the U.S. Securities and Exchange Commission. On Thursday, the Commission once again dampened market sentiment, forcing assets to go through the lows again. Bitcoin traded at 25,900, or 0.41% lower at the opening of the U.S. exchanges, while major altcoins fluctuated between 0.5% increase and a 1% decrease. Overall, in August, the price of Bitcoin dropped by over 11% from around $29,200 at the beginning of the month to $25,900 at the end. Market sentiment was spoiled by the Commission's decision to postpone the approval of ETF applications from the Fidelity, WisdomTree, Valkyria, WinEck, Bitwise, and Invesco. The seventh application from asset management giant BlackRock has yet to receive a response from the SEC. As for Bitcoin's intraday outlook, if the token cannot hold above $25,900, it might decline towards $25,000. Today, the asset might fluctuate within the corridor of $25,900 to $26,200. Breaking through the later level could pave the way for Bitcoin's recovery towards $26,500. Make profits with the InstaForex. Check InstaForex TV channel for prudent trading decisions, and see you later.